every quarter has been some trouble or the other, some India, Pakistan, some political uncertainty, some Harshad Mehta, Ketan Parekh, some change is always happening in the last 25 years, every quarter. So you never feel any time that everything is sab acha hai, sab stable
Yeah.
hai.
Yeah.
But in spite of that, India has grown. So I think having that bifocal and this paradoxical approach to India, that great story in the long term, but always uncertain, volatile, ambiguous in the short term.
Thank you so much, Rashesh, for joining today. And for everyone watching in this country, we all have followed your journey, and we all look up to the way you have built Edelweiss, your business, and why it is extremely important today that we are talking is, you started very, very early. And to me, your journey is also very reflective of India's growth, the way you grew. And today we are talking about Atmanirbhar Bharat, but I think in middle 1990s there was this Atmanirbharta because there were so many players, and you were the local disruptor who started small, and today has built such a large entity. And I would really request if you could, take us through the journey, and more important for entrepreneurs today, for startups today, if you could tell us, two, three key things that if you look back today and say, okay, these were some of the things I did right, and that's why I am where I am.
Yeah, I think it's actually very interesting that you say that. Uh, Edelweiss is now 25 years old, and India's this part of economic journey, as we call India, opening up and all, is also now almost 25 years old, because it was after the 91 balance of payment crisis that Indian economy actually took almost like a pivotal turn and started on a new kind of a framework. So it's interesting, I think, and it's always a good time to sit back and look back. And ironically, I actually went to do an MBA in order not to be an entrepreneur. So my whole ambition, because I come from a business family, my father, my uncles, everybody was always in business. So I always had this desire not to be in business. I wanted to be, an officer in a company, working an executive. So that's why I went and did my MBA and then joined ICICI. And my idea was to stay put there for as long as I can and continue to grow. But I think after the 91, 92, as India's economic liberation started happening, and also I was very fortunate that in ICICI I met with a lot of entrepreneurs, because
Hmm.
I think part of the job was to work with companies, and I was in the export group where I dealt with a lot of new age companies who were competing in global markets. So companies like Infosys and all were my clients, and this was
Hmm.
almost 28, 29 years ago. And at that point that you saw that there were entrepreneurs of a different class and who were really competing in global markets. And India was opening up, and government was encouraging new entrepreneurs, and there were foreign investors coming in. So I would say the 91 to 96 period was a very fertile period for entrepreneurship and India's economy opening up, and we all got caught into that. We were young, partly naive, partly the enthusiasm of all this new stuff is happening. Capital markets are going to open up, insurance, banking is going to open up, India's financial services. And as when we were growing up, you read all this things about Wall Street and US capital markets and all. So there was always a feeling that all this will happen in India. I must say that a lot of my hypotheses at that time, the reality has exceeded those, but a lot of other hypotheses have not come true also. So it just shows that the hypotheses you formulate are also ultimately hypotheses only. The reality will take its own its own path. But what happens in a lot of this is there is an asymmetric payoff. And I think that is what actually at that time, including Vidya, my wife, who was also my batchmate in IIM Ahmedabad, she used to work in an investment bank, and she encouraged me and said, if you want to be an entrepreneur, try it out, because ultimately being an MBA, you can always get a job again, but
Yeah.
there is no harm. And I think we said, okay, I think it looks exciting. All our dreams are there. And we started off in a very small way with just about a crore rupees of capital. We put together our equity capital now is more than 8,000 crore. But at that time, even 1 crore looked like a big amount. And as I said, I think there is usually, we always underestimate the upside that will happen over a longer period of time. And in my wildest imagination, I would not have, have even formed a hypothesis or assumed the kind of growth that we have seen, but also India has seen.
A lot of people started, and you rightly said 91 to 96 was a very interesting phase in our country, in our country's journey. But so many would have started with you, and so many people we see getting into the domain that you are in. But what you have built with Edelweiss, if I may say so, is a very iconic brand, and we have to recognize the journey. If I have to ask you that, as an entrepreneur, if you have to say, in hindsight, these were two, three things that we did right or we learned along the way which turned out to be right, what would those things be?
So I think from very early on, uh, one of the guiding principles we had was get good people in the company and get them as partners. And one of the things we have done is we have actually one of the widest employee stock option program. And employee stock option is not to give economic benefit only, but to really give that emotional feeling of ownership that we are all equal and we count. So like in our company we don't use the word founders and co-founders and all, because I feel every year whoever is adding value is a founder. There can't be any grandfather rights. So we started off as a new age company because fortunately we are not a old business family which had anything to protect or any the legacy systems and all that. So we started off with that. So I think starting off as partnership, getting some great people, and I think the best part of Edelweiss journey has been, getting really a lot of great
Mm.
who have stayed on, grown with the company, and and people. So idea was to create a company where you can attract the best. You are actually blind to either gender or caste or anything. You just look at the very meritocratic approach, and we are very harsh as a company. We evaluate ourselves a lot, both internally and externally, but it's a very fair kind of an organization. So I think some of the so when we started, we put down the guiding principles of the company, and even now, when you open our annual report or you go to our site, you will see the guiding principles, and we have added a couple of them more over the years. But when we started with some of the guiding principles. Like we'll be a fair organization, we'll be a partnership, we'll protect our capital. So the other thing we've been very careful is to make sure that our capital is a very precious commodity because you can't take that for granted. And we don't come from a large business house where there was a lot of capital available. So we always been very careful. We always made sure that we reinvested back the capital in a very thoughtful way. We raised capital. We always very well capitalized, and we protected our capital and we grew the capital and we made sure that we took risk. Obviously, there is risk. Even if you think you are not taking risk, there is some risk uh, that is always going to be there. But you have the mitigants in place, you have the fallbacks, the plan B, plan C. So I think risk management and ensuring that we were very, very careful about it. And the other was people. And then the third thing that we have always insisted, and the guiding principles helped us a lot in that, is building a culture. So even today, if you ask me, the three assets we would have in order of importance would be people, culture, and capital. And I used to think that people and culture are interchangeable, but I learned one thing in the last 25 years, that culture affects people and people affect culture. Like you and I are the same people, but when we go to maybe another country, we behave differently because the culture there is different versus the culture, the way we drive on the road in India will be different from how we'll drive outside. So culture also affects individual behavior. So I think people and culture, you have the right mix of that. And then you have, because we are in financial services, capital and risk management is very important. And you have the right guiding principles around that. A lot of other things fall in place. Then, your business evolves, your
Yeah.
uh, strategies change, you make mistakes along the way. And we have made a lot of mistakes along the way. That, if we talk about our mistakes, we can talk for hours and hours. But you evolve. And I think, unfortunately, you always learn by experience. So I think in that sense, it's been a great journey. But the mistakes that have been, I think, really, harmful ones are the ones if you make the people mistakes. So we've been very, very careful of that. And have we hired wrong people in the past? Yes, but we have been very careful to make sure that we acknowledge that and get that out. And when we hire the right people, we actually grow them a lot. And I always say that even hiring people is a risk, because if you hire a wrong person, they might take value away for a year or two. But if you hire the right person, they add value for 20 years. So there is a
Yeah.
huge payoff. So you be careful about hiring. Also acknowledge, evaluate people, and see whether they are the right people from an integrity and capability and all that point of view. So I would say I think getting the people equation right has been one of the most fortunate things. And again, I say there is also fortune and luck in all this, because a lot of people who ended up coming to Edelweiss were, I met somebody somewhere and we started talking. They came and interviewed and they ended up becoming, or somebody was working in one part of the company, who wanted to leave, and I convinced that individual that maybe they should look at something else, and then they just prospered and became a senior leader in the company. So there is an element of serendipity. All of that is also there, but we all have had the biggest tailwind that India has had, which is the last 25 years of growth. And that tailwind, and over 25 years the compounding really happens. It's very hard to imagine. So when we started 25 years ago, I could not have imagined. But if you just do the math, this was almost an inevitable kind of stage, because India growing at that at that pace would have got us here in some form or the other.
It is a case study of sorts, because when we talk about Indian entrepreneurship, we say that Indian entrepreneurs are not like maybe entrepreneurs outside, because who build a very egalitarian, very democratic setup. But I think you have, and not think, you have, because I have also had the opportunity to talk to many of the leaders in your company, and you rightly said they behave, talk, and conduct themselves as owners, as founders. And I think you did that very early on, is also a very strong part of the conversation that we should have, because still, if you look at the world and the way we build businesses in our country, it's very hierarchical, it's very old fashioned. And when we talk of the iconic brands outside the country, then we should look at Edelweiss also, because you built that. And now what you're saying is that you had that very, very early on when you started this mind frame.
I think this egalitarian or a fair culture and no grandfather rights and all, because it's an advantage of being a professional. Because I started my career in ICSA earning 2,800 rupees, so I've also got my appointment letter and salary slip. So you can empathize with that. I mean, if you had inherited a business, you may not have gone through all of that, and what is my take home and how much leave I have every year. So you do empathize that people want a few simple things from an organization, and the organization should strive hard to give that. So I think that way, being a professional company, being because being first generation entrepreneurs, a lot of this came automatically. You didn't have to. But idea was also that I think we are in the knowledge business, and where people are very important, because
Yeah.
it's not that you put up a steel plant or a cement plant. It's not an asset based business. It's a very people based, very knowledge based business. And when we started off, we hardly had any capital. So the only real asset we had were the people, and we were doing advisory services and investment banking and research. And so you did really had to invest in your people all the time. And we invest a lot. Even now, I think one of our biggest, all of us, including me, like for example, every few years we get coach and all that. So we all have executive coaches, and we make sure that leaders, because in a lot of companies, people just approach saying leadership happens on its own. You give them the opportunity. Some people will grow, some will not grow. But we do believe that helping, hand holding, mentoring, coaching, all that also expertise. Because if a Sachin Tendulkar can use the help of
Yeah.
a coach, why can't a good executive who has a lot of potential to grow? So we believe in all this a lot. So we invest a lot in people, and we make sure that people get the best possible growth opportunity at a personal level also, because if the people will grow, the organization will grow. And our idea has been, I think one of the things I've seen, and I've worked with a lot of companies in India as they have been clients and they've been friends and all that. I think one of the things that really kills culture in a company is this need for control and
Hmm.
authority. And I think I've seen, and whether it's a family business or a professional business, wherever the boss comes from control, and that partly comes out of insecurities and partly just the desire to micromanage and all. So we have created a culture where control is only if it is required. Otherwise, the idea is to give more control to other people who can make the best possible decision. So, like in Edelweiss, we say that we have a functional hierarchy because we can't have anarchy, you can't have chaos,
Yeah.
because somebody needs to report to somebody, somebody needs to finalize somebody's KRAs and all that. So we have a functioning hierarchy, but we have no intellectual hierarchy. So even a first year associate can argue with me. So when we are evaluating a case or an investment proposal, even a first year analyst can argue with me saying no, this hypothesis, and usually they are right because they know more hours on that than I have spent, because a lot of my knowledge ends up being very superficial. So yeah, I have a lot of experience, but then what the current market situation is. A lot of them know that, and I think having that culture is also very important. So no intellectual hierarchy, and that partly comes out of insecurity, partly the desire to control, the desire to to micromanage all of that. So we have tried to work out so that that is low, because that really allows people to grow and prosper.
You've been a part of the journey, of the incredible journey, or the as we have made as a country, and today we are unapologetically Indians, and I am in the world of entrepreneurship and startups, where today I'm seeing young Indians go across the world, build great businesses. But somewhere there are two narratives in the country right now, and I'm sure you would have followed some of the, I don't want to mention, but some of the articles which have recently been doing rounds, that India lost on the opportunity that it had. Somewhere we messed up the opportunity we had, and then there is this other uh, view that our time has just begun.
Over the years, one of the things I've learned, and I say this very often, that India is a complete paradox. And there is a quote which says India works hard to keep the optimist and the pessimist both happy. So
Yeah.
there's a kind of story where you choose, and it's the same old cliche about glass half full, half empty. But it's really true about India. I think whatever we say about India is never as good as it is made out to be. Never is it as bad as it made out to be. And I think one of the part in India, and part of that is media, part of that is the way we are Indians. We have a lot of drama in our lives, so we swing a lot from euphoria to complete fear to this extreme that India is either the greatest opportunity in the world, or it has completely missed the opportunity and is not going to go anywhere. And I have learned over the last 30 years of my career that actually the extremes are never true. They are not a true reflection. India is always in the middle. Yes, are we underperforming to our potential? India, yes, I think India's potential is a lot higher, but that is true with a lot of us as individuals also. I'm sure
Yeah.
we are all actually capable of doing a lot more. Like a few years ago, I could not even run 3-4 kilometers, and I decided to, first I did half marathon, then a full marathon. So I didn't know how much I can do. So we all don't know what our real potential is. But I think India can grow at 8 to 10% a year consistently. But because of a lot of legacy issues and all that, we are stuck in between maybe 5 to 6 to 7% growth. But it's hard to imagine India growing below 5, and it's hard to imagine India growing above 8 on a long-term consistent basis. And if you look at between 95 to now, or any period, if you look at post 80s, after we change our economic policies and structure, India has grown at between 4 to 8% a year on a consistent. There have been few years which have been above 8, and a couple of years which have been below 4. But if you look at even the quarterly rate of this,
Yeah.
if you take 30 years, which will be 120 quarters, large part of them will be between 4 to 8. So I think we should assume that India will grow at 5 to 6%, based our hypothesis on that, because one of the other things you learn as you get older is happiness is also a function of expectations versus and reality. So idea is in India not to keep your expectations too high, but I think it is okay to assume a 5-6% growth in India, which will be an underperformance. I'm not saying no, because I think India can grow at 8-10% a year, and if we can grow that, it will be great because there'll be so much wealth creation and people getting jobs and poverty coming down and all of that. But if not, we will still grow at about 5-6, and that is good enough. And if you look at like the example I give, I graduated in 1989, where India's economy was a $200 billion economy. 200
Hmm.
billion, and this is in US dollar. And the rupee is also, at that time the rupee was 18 rupees to a dollar. So we were a $200 billion country. When we started Edelweiss, India had become a $300 billion country. In 2007, we became $1 trillion. So in 2007, Shraddha, after almost 60 years of independence, we became $1 trillion. We added another $1 trillion between 2007 to 2015. We became $2 trillion in 2015. And as you remember, between 7 to 15, we had the global financial crisis, the
Hmm.
policy paralysis, the high inflation. Rupee fell in 2013-14 because of taper tantrum and all that. In spite of that, in US dollar terms, India added 1 trillion. In 8 years, we added to our economy what we added in the first 60 years.
Yeah.
Whatever we say between 2050 to 2020, we have added another 1 trillion. So we added 1 trillion in 60 years, then we added 1 trillion in 8 years, then we added 1 trillion in 5 years. So we are now at a stage where we are adding the size of India of 2007 every 3-4 years now.
Yeah.
That's the kind of compounding of growth that is happening. It's hard to imagine, but it's happening in front of our. It's happened in front of our eyes. I mean, when we started, the total bank deposits was only 5 lakh crore. Today, bank deposits are almost 1,30,000 crore. They have grown
Yeah.
by 25, 26 times. So I think India, this kind of growth is there because we have savings, we have investment rate. We will go down to, if we ever go under 6, it will be a disappointment. We go above 6, it will be a lot of happiness. We will end up being between 5 and 7. And as long as we align ourselves to those expectations, India will do well. I think India will do well, but India will also be highly volatile. There is a lot of uncertainty and ambiguity and policy changes and all that, partly our own doing, partly the drama that we like because we like to tinker a lot, all of that. I do feel that Indians, we have a lot of drama in our lives, and I think the Indian media and all also, they feast on that. Part of this, if we bring it down, we take a long term calm view, I think India will do well. But India will always be volatile. So the other thing I always say, that India needs what I call a bifocal approach. You need to keep an eye on the long term, where India can be in 25 years, but also the next 2 quarters will always be trouble. And it's my own experience in the last 25 years, every quarter has been some trouble or the other, some India Pakistan, some political uncertainty, some Harshad Mehta, Ketan Parekh, some change is always happening in the last 25 years every quarter. So never feel any time that everything is sab acha hai, sab stable
Yeah.
hai.
Yeah.
But in spite of that, India has grown. So I think having that bifocal and this paradoxical approach to India, that great story in the long term, but always uncertain, volatile, ambiguous in the short term.
If Rashesh, if you had to say one or two things that we need to do as a country, because and again, I'm talking more in terms of employment, which is today a huge challenge, and especially in the pandemic, so many people have lost their jobs. There is at the ground level, there is a little bit of not a little, a lot of uncertainty. If you have to say that as a country, one or two things that we should focus on and do it well, what are those things?
So I think you hit upon the right word. That is uncertainty. I think, see, there is anyway uncertainty in the world. There'll be a COVID, and there'll be maybe U.S. interest rates going up, and those uncertainties are a given. But I think our approach should be: can we reduce the uncertainty? Can we have more policy stability, more long-term planning? Because by doing all that, you reduce uncertainty for entrepreneurs, which then reflects in their ability to make long-term investments. Because if you're going to change the GST rate every year, it's very hard for somebody to make a long-term investment. So I think all these are small examples. So I think reducing uncertainty and hence reducing risk. there will always be risk. But if you can reduce it by
Yeah.
processes and through certainty, and I sometimes give the example of the airline industry. I mean, 30, 40 years ago, airlines were risky and there were accidents and all. But if you look at most of the airlines all over the world have a standardization, there'll be a checklist, there'll be a protocol, the announcements that happen, there is a huge amount of standardization, and they've reduced uncertainty as much as they can. And I think that is what we need to do as a country. Then we can, continue to grow as close to our potential as possible. The other thing we need to do is India's financial system is very inefficient, and we see this, periodic, issues that happen. The cost of capital is very high. It's a very strange, situation we have, that people who save money feel they are not earning enough return on their money, and
Yeah.
people who borrow money feel that they are paying a huge price, and they both can't be true, right? Because ultimately the job of the financial system is to take money from people who save money to people who want to borrow money. That is largely, whether you are a mutual fund or a bank or a NBFC, that is what you are doing. You are channelizing money from the providers of capital to the users of capital. But that intermediation is very expensive, because there is a lot of inefficiency, rules and regulations, industry structure. If you can bring down cost of capital, one by reducing uncertainty, and the other by making our financial system more efficient, this can be a big catalyst, because we have entrepreneurs. I mean, we need
Yeah.
more entrepreneurs, yes, but I think there are a lot of entrepreneurs. I'm sure you deal with a lot of them. There are a lot of entrepreneurs. There's a lot of opportunity. They need capital. They need access to capital, equity capital, debt capital, all of that, and they need an environment that is as stable as it can be.
We've been talking about this segment, MSMEs and SMEs. इनका actual terms में growth or scale करने के लिए as a country, what are one or two things that we need to do for this segment, which is contributing significantly to our GDP?
I think obviously access to capital. You ask almost every MSME, access to capital at the right price at the right time is very hard. I think MSMEs are the one sector that I think individual home buyers. You want to buy you want to buy a car or a TV or a home. It's, I think, now got easier to get a loan. I think corporations, large companies can borrow in India outside. I think the MSMEs are the ones whose availability of capital, both equity and credit, has been coming down over the years. So we have to do a lot of things, and it needs government, RBI. We also need to develop the financial system, the economy, all of that. Information is a very important part now. With GST and all, more information will be available. But all this is required. So I think providing capital to MSMEs is one very important part. The other one is MSMEs have undergone a big change. So if you see, India is constantly changing, and there are three parts of the economy. There is a formal economy, there is an informal economy, and there is something in between which is called the semi-formal economy. A lot of MSMEs are in the semi-formal economy. Uh, to handle them when they are semi-formal is there is a lot of intervention required, and I think by making it easy, creating associations which help them to move from the informal to the formal, because with GST, demonetization, all these things we have done, we are trying to formalize the economy, but it doesn't happen overnight. An
Hmm.
informal company doesn't become formal overnight. They go through this semi-formal status. In fact, our NBFC focuses a lot on companies which are in the semi-formal one, because they have the track record, they have information, but they are not as formalized as they will be maybe in 5, 10 years. So
Yeah.
I think that whole hand holding, because we see our economy in two. When we talk to government also, they see formal and informal. I think the larger part of the MSME world is in the semi-formal, and creating clear policies, hand holding the credit to semi-formal. If you look at a lot of the MFIs and all that have come about to provide money, credit for the informal sector,
Hmm. Hmm.
because that is informal,
Yeah.
the rural sector. There are banks and NBFCs for the formal sector. There is very little kind of focus on the semi-formal. So that is another passion of mine, and we talk about it a lot. We need to help the semi-formal sector grow.
What do you have to say about the tech lending platforms? Because in the startup world, we saw so much of investment happen in the last couple of years. What's your and then with the NBFCs, the lending, and now with government coming up with this new thing that large corporates can all be banks. What do you have to say about the tech lending platforms that have come up in the country?
I think it's been a fabulous innovation, and in all parts of the financial services industry, we need innovation and disruption and all that. And we have seen some of it in the payment space. We
Yeah.
need that what you are talking about in the credit space. There is asset management, insurance. It's happening in insurance, like in the general insurance space. So if you look at financial services, there is general insurance, life insurance, asset management, broking, then wealth management, credit, payments. All these are parts of the financial services system, and all of them are not the same. They appear all as one. So I think the payment part has got disrupted the most, and that has been a great thing because really the payment system has evolved. We've seen the India stack and UPI and all that. I think credit could get disrupted also, and it should get disrupted because that is where the intermediation cost will come down. So a lot of these platforms which are there, they are able to, I think reduce the intermediation cost, improve the customer experience also. Because one of the other problem in financial services we have, it's a very product-driven industry. It's not a customer-driven industry. We don't talk about customer experience and all as much. But I think with technology, a lot of that will be possible. With technology, the other big advantage we will have is the unit cost can come down, because I think
Hmm.
cost economics in financial system has been a problem. If somebody applies for a 5 lakh rupee loan, it's easy to process it because the processing cost is worth from the loan amount. But if somebody wants a 5,000 rupee loan, the processing cost can be high, and technology can bring that also down. Because the other paradox of India is that India is a large economy. At $3 trillion, we are among the top six economies in the world. There is only UK, Germany, USA, Japan, and China ahead of us as economy size. So we are large economy, but our per capita is only about 2,000 odd dollars. So
Yeah.
we are a very small, because all these countries are at 30, 40, $50,000 per capita. Even China is at 14, 15,000. We are only at 2,000.
Yeah.
So if you look at on a per capita basis, India is a very small country. If you look at the 3 trillion GDP, we are a large company. And the problem that happens is, in order to make the business work, you have to worry about unit economics. You can't say it's a 3 trillion economy, because your buyer, an average buyer, is only at $2,000 per capita buyer. So like in insurance or in mutual fund, your average ticket size is about one tenth of the average ticket size in the world. So like in mutual
Yeah.
fund, it is about 1,000 rupees is what they invest in a SIP or something. Now, how do you have an agent and an advisor who can make that unit economics work? And in that, I think technology will play a big role in bringing unit economics down very quickly, and that will really expand the services, including credit, to a lot of people. India has only about 40, 50 million people who have access to credit. We need 300 million people who can have access to credit. But for that, we should be able to do a 5,000, 10,000, allow people to build their credit histories and all that. So I think technology in credit and all parts of financial services is going to be the biggest game changer. And all the new fintechs and all are adding to the, to
Yeah.
the swirling that is going around. So it's great and it's fascinating to watch.
Rashesh, are you going to be investing in startups? Do you invest in startups?
We invest in startups all the time because in Edelweiss we have a lot of startups. I mean, to honestly give you an idea, I mean that is actually what we do. If you look at Edelweiss, we are
Hmm.
not a financial services company. We are a company with a lot of financial services businesses underneath. So, like you must have recently seen, we have got PAG as a large private equity fund as a partner in a wealth management business. They valued that business at 4,000 crore, and they're putting 2,000 crore to buy 51% stake in that business. This is the business that we started Edelweiss with 25 years ago with 1
Hmm.
crore of capital. And over the years, we have raised some money and we have totally invested about 100 crores in this business. And we started started off with investment banking, added broking and wealth management and all of that. But today, this business is worth 4,000 crores. So we invested about 100 crores over, say, 20 years, and it's now worth 4,000 crore. Same thing, we have a general insurance business. We invested 300 crores in that in the last 3 years, but it's a large business, hugely scalable. And each one independently, if you were to go out and value them, they've given us a great return on capital. Same thing on the life insurance business. In the asset management, in our ARC, you must have known that we are one of the largest, we are the largest ARC in India. We started our ARC business with a 30 crore investment in 2008. And over the last uh, 10, 12 years, we've invested about another 150 crores in that business. So total investment of 170 crores. But today the capital in that business is worth 2,000 crores. So
Mm.
we invest in businesses, but of course we don't just, we are not a passive investor. We also get the management team and we put the system and we handhold and we help grow the companies. But today Edelweiss has got 10 businesses. We have an insurance broking business, which was a small business where we got Arthur Gallagher, which is the fourth largest insurance broker in the world. They've come and bought a 30% stake and valued the company at 250 crore. This is the business that we started 10, 12 years ago from scratch. We have not invested a single rupee. It's been profitable from day one. So we have 10 businesses in Edelweiss: insurance broking, life insurance, general insurance. Each of them has been a startup because we have started all this business and over the years we acquired and grown. So we do that all the time. We also invest in, but we are not a fund. We don't we are not passive investors, but we constantly invest in businesses and grow. And we look at asymmetric payoff. As I said, you can invest 100 crores. There have been businesses we have gone wrong. We have closed down those businesses also.
Mm.
And we have
Mm.
invested 30, 40 crores and we said, the hypothesis doesn't work, we close it down. But you invest 30, 40 crores, hypothesis doesn't work, you close it down. You invest 30, 40 crores, hypothesis works, it can become 1,000, 2,000, 3,000
Yeah.
crores.
Yeah.
And that is what we can do.
No, but with your track record, if I may say so, and then the way you've scaled businesses, it would be so valuable if you have a fund which invests in startup businesses also, no? Because you can bring so much of value to businesses.
Yes, but there are already a lot of funds out there, and I think providing fund capital and passive capital is got. There are a lot of people there, and there are very smart people out there. I think growing businesses, incubating businesses, growing them, creating great leaders out there, empowering
Hmm.
them, even giving them skin in the game. That so we are so we actually are builder of businesses. We are not just investors. You have to
Hmm.
invest to build a business. That is, but only investing, there are a lot of other people can do. But investing and building businesses, including changing management team if required, because there was a good management team at the startup stage. Now the business is scaling. You need to get some people who can put systems and processes and technology. So we do all of that. So but we build businesses. That is what we do. I mean, there are 10 businesses in Edelweiss, and we see each one of them as a standalone business. We have an asset management business, AMC business, mutual fund, which has been growing very well. We were in that business, we were about 1,000 crore AUM about 6 years ago. We are almost 45,000 crores now.
Wow. Wow.
So we
Hmm.
we grow businesses. So we incubate, invest, build businesses, grow businesses. Then we bring partners in that. So five of our businesses have got outside partners: Tokyo Marine, Arthur Gallagher, CDPQ. We bring all these investors. Now we've got PAG. So our idea is we think like how do we create value? But by doing all of this, identifying opportunity, bringing management team, giving the capital, putting it together, and we understand financial services. So I think this is a fairly, the unique mix, and we have a track record of having shown that we can build this again and again, and we
Yeah.
constantly.
What's keeping you going every day? Is there a big dream which is still left to do or achieve?
I think the idea is to build, and actually, though Edelweiss has grown a lot, we are still a very small player. So there is a lot of growth ahead of us. But I think what our aspiration is, it's not only growth. I think growth is India, anyway, growth will happen, but it's quality and excellence, and really, and part of quality is also having people who are empowered and great institutions you can build, great organizations you can build, which are long term sustainable. That is the fun in that. That is a joy. It's not making returns. And I always say that market cap and profits and all are all output variables, but the input variables has to be energy and passion and all the
Yeah.
qualitative factors that we talk about, and that is where you enjoy. Nobody enjoys. I mean, and that is the problem. If you say India is a $3 trillion country, it's not fun. But you say how India has built businesses and entrepreneurs and all of
Yeah.
that is where I think the pride comes in. So I think the idea is to continue build an organization, build businesses, have people grow, and have something that is of real value uh, to all the stakeholders over the years that you built. And it's been fun journey. So it's not that you are hating yourself and killing yourself and doing all this. I think you enjoy it because ultimately that is what we all converge towards. I mean, when I look at even people like you and all, I think I know you started in Times of India or something. Huh?
Yeah. Yeah.
And then you have to converge and forge your own path, because we all start at any place, but we all eventually find, if you're fortunate enough to find things we enjoy and we can grow. And it's not that you enjoy every day. We all have our down days, and we all have our days saying, what is this for, and why do this. But overall, at the end of the day, you sit back and you enjoy. And I call this like running a marathon. When you run a marathon, you don't always enjoy why you are running, because sometimes you're huffing and puffing and your knee is hurting, and all of that is there. But at the end of the marathon, you feel satisfaction, you feel
Yeah.
accomplishment, and that is why you do all this. Ultimately, there is no real end goal as such that you are trying to, because I think Edelweiss has become fairly large, but the for us the size is not important. If you can build a quality organization, then quality not only in our eyes but other people's eyes, I think that will be a good thing to have, and it's a constant investment and improvement that you need.
What's that one thing in your life which gives you anchoring as a human being, as a professional, as a person? And if you could talk about, do you have any spiritual leanings, or I'd just love to know what's that one thing that gives you uh, that anchor.
So I think it's a cliche. It's a cliche, but the family is the anchor. I think Vidya and my kids, we just enjoy being with each other. And I think the good thing about the COVID pandemic has been, my daughter was studying in the US. She came back. My son is at home. He's working in Mumbai. So having all of us together after a long time, all four of us have been together for such a long time, and that itself is a great. So I think family is obviously anchor. Lots of friends, they also very big anchors, and things like hobbies like running and swimming. I love that. So those are anchors. I read a lot. I see all the books behind you also. So I enjoy reading. I end up reading about between 50, 60 to 80 books a year.
Wow.
And I just enjoy reading a lot. So I think all these are the anchors which are there. But I think at the end of the day, we have all evolved, and I think I am a very different person now than what I was a few years ago. So I was very analytical, very atheist, very so I'm not very religious even now, but you are spiritual. I have become spiritual over the years. I meditate. I also pray, but it's more spiritual, because I think we have all grown up as being very analytical, very IQ oriented, and you realize that there is a much larger world. The EQ world and the spiritual world are the different world than the IQ world. So I have also become a lot more calmer, a lot more I think easygoing, if I may say so. I used to be a kind of guy I used to get out of the plane, and I used to time myself how much time it takes to get out of the plane to be in the car. And I used to keep that time as short as possible. I travel a lot, so I wanted to be, but I think that hurry has gone away. That I think as we evolve, but it's partly age, partly the family and all, and then you realize that the fun in the journey is a lot more fun. So all this other one. So not very spiritual or religious, but I also I follow Buddhism a lot, and I,
Hmm.
I like to learn. So I think one of the things that in my life that I've learned, that I've enjoyed, and I hope I continue to do, is constantly ability to learn. And I just love to learn. So I read books to learn. I I discover new things, and it's amazing that every time I realize so much more I don't know, so much to learn. So to give you an idea, about a few years ago, I didn't know how to swim. So I was 50 years old when I said I want to learn swimming, and I
Wow.
I started learning swimming, and now I can swim for an hour, 2 hours in the sea also. So I think that what if you constantly learn and having that curiosity about learning is, I find, a very energizing force. But that works for me. I think the different thing works for different people. But that I find as one of the constants in my life.